Welcome to the Rose Show podcast.
Thank you so much for joining us this afternoon. We hope to make this space educational and lots of fun. Quick disclaimer, please do not construe this as investment or financial advice. I'm Rosanna, your host, and I have the utmost pleasure of being here with these fabulous women option traders who will be sharing with us their trading methodology, strategies, mindset, and more. They are not only super amazing traders, but also really great people. Please make sure you're following all of them. I am so excited to learn more from these great ladies. Thank you. Well, as the famous Charlie Munger once said, the best thing a human being can do is help another human being know more. And that is what we hope to accomplish here this afternoon. So let's begin. We're going to go around and ask everyone to introduce themselves and tell us a little bit about their trading style. Let's begin with our mystery special guest, who's now revealed, Jess. Jess, you are a freelance marketing writer, journalist, and dynamite options trader. Please tell us more about yourself and your trading and investing styles.
So I got started in 2017, but I am as a long-term investor. I started with like 4 stocks, or maybe it was 5. I think we split. I think I liked 2 stocks in a similar space and split the difference. So I am used to being incredibly concentrated, and I feel I feel relatively comfortable with a smaller portfolio. But I am also very lucky to have a generational generational knowledge as a long-term investor. My father, who honestly I always kind of assumed must have gotten started in the stock market after grad school when he got his first real job. Turns out I bothered asking him and I was wrong. As it turns out, he started investing in the late 60s when he turned 18. So he has made every mistake and seen literally everything, from runaway inflation through the 87 crash, the dot-com bust, the great financial crisis. So I am very lucky to have access to that kind of knowledge, and I try and share it whenever possible because, frankly, other than Warren Buffett, there really are not a lot of long-term investors with that kind of experience, especially ones who've seen runaway inflation. I mean, we all hope it's not the 70s, but if it is, I'm lucky to have guidance to rely on.
I love that, to have a mentor, your father. He's amazing. We got to get him on a space one day. And it's just amazing to be a long-term holder for that long. What an example he sets for you and your siblings. And it's just amazing. So thank you so much for sharing that. And I assume you are also a long-term investor, correct, Jess?
Yes, you can pry any of my long-term positions with with a favorable cost basis. I mean, you can pry Amazon for my cold dead hands. I understand markets go up, markets go down. You just unless you are retired or planning to retire in the next few years, you should stop panicking. All it does is waste mental energy, because unless you're looking at retirement, you have plenty of time to make up for any bear market, even one that is incredibly painful, because the odds that it's the 30s again are slim to none. Other than that, which is an absolute worst case scenario, you're gonna be fine.
I love that. We're going to get to mindset a little later in the show. I love your mindset. You are so smart and you're so well read. Jess, so wise beyond your years. Everyone listen to Jess. 100% agree with you. It's about time in the market, and we grow our wealth over time. Thank you so much for sharing that. Leah, we're going to go on to you now. I know you're in Central Europe. You travel the world. You are amazing. You're so exciting to follow. You're an investor, options trader, coach, published author, You have a master's from Columbia. Is there anything you don't do? Please tell us about yourself and your trading and investing styles.
Hi there. Thank you so much for the intro. So, yeah, as you said, I'm from Central Europe. So you can imagine nobody invests in stock market here. And I grew up with the mindset from my parents that I should just save money, which I have been doing successfully until my probably year 30. And then I started investing into the market, maybe when I was 29, when I moved to the US. That's when I first time started. And I just basically bought Vanguard funds, and I was saving every month certain amount of money, and I just the money sitting there. And then I was surprised after some time how it's accumulating. So yeah, I've been just doing that pretty much. And in 2020, when COVID happened, pardon me, in 2018, when we had the issue at the end of the year, that was the first time when I actively actually stepped in and sold all my positions and felt really smart because a week later the market tanked. But then in January next year, 2019, I did not manage to get into the market on time. So not only I had to pay a huge tax bill, but I also did miss the bottom. So basically at the end of the day, I did not make extra money. So I said, this is probably the best to hold all the positions. And in 2020, when COVID happened, I was like, how is it possible? My money is gone. And I was very upset. So I decided to learn trading and not just being a passive investor and pay someone management fee, but I also wanted to trade myself. So I started taking classes. I studied with different people and learned different techniques. And I learned what I like. I'm a terrible day trader. I'll be honest with you. I'm not day trading as well. I make little money day trading, but I'm focusing more on selling options now. As I learned my lessons from buying options at the beginning, I love selling options. So that's what I do usually. And now in this market, I tell you the truth that I have about 20 companies that I researched, and I believe in those companies. And I don't treat the price of the stock right now as a price of the stock. I'm just more looking at how many shares do I have, because it's psychologically better. I say, oh my God, I have so many shares. So I know one day, as Jessica said exactly, I just don't freak out. I know the stock market will probably get worse, but I still have cash left, and I will be adding to those companies and doing it on a really nasty day like today. Or today I haven't sold any puts, but on days like this, I would usually sell some puts on these companies I already own. And if I get a sign for those prices, I will be happy. If not, I will keep doing it until I get these shares assigned. So that's like my long-term investment strategy. So I'm actively doing it. And once I get a sign, and once we will be in a time when the company is turning towards overvalued, I will be selling covered calls. Right now, the covered calls do not work well for me because we have all these violent moves, and usually I don't want to lose the shares quite yet because they are truly undervalued. It would be a shame. So I'm more focusing on selling puts, and I'm also really loving bear put spreads. That's what I do almost every day. When we have day like this with the huge volatility, I love to do it. And it's safer. I know I could make way more money with just buying puts, but as I said, I learned my lessons. I know what works for me. I want to sleep quietly. And it's like very, very rarely I buy puts. Like I had some puts on Tesla, I have to say, and I have some puts still on SPY because clearly we're going lower. But the bear put spread is my strategy, what I do.
I love it. I love it. I love the bear put spreads as well with the higher VIX. I prefer doing spreads. So that's nice. I like that. And I have to say, you really embody the growth mindset coming from Central Europe and being where you are today. Impressive. We're so happy to have you here today, Leah. You're amazing. Thank you so much.
Thank you.
Mm-hmm. Let's go to Nargis. Nargis, just recently met you, and I am so impressed with your day trading and your options trading. Your technical analysis and charting are superb. I met you on the wonderful Women of Wall Street show that is on Fridays, and I'm just so impressed with your style. I have lots to learn from you because Leah, actually, I'm probably a worse day trader than you. I'm not a day trader. I'm a swing and long-term investor. So I have lots to learn from you, Nargis. Wow. I see your profile also says cycles and foodie. Please tell us about that, yourself and your trading and investing styles.
Hey, hi, Rosanna. Thanks for inviting me here. And I do pronounce my name as Nargis, G versus J. So that's there.
Nargis?
Yes.
I'm so sorry. Thank you so much,
No.
Nargis.
That's absolutely
Thank you.
fine because it's a proper noun, right? You can do it anyways. So, originally when I started, I had no clue about stock market or anything. So, I just heard it from the chatter in my office, right? And slowly got to know that there is some mathematics behind it versus, companies and stuff like that. And then the real stuff happened when I took a break after my second son was born, and I stayed at home. I took a break. I was too tired to, do stuff, go, or maybe, you're just tired at working every day in and out at office or corporate world. So I thought I'll take a break, and then I started doing this, and then it really, I guess some people get to know what their interests are very early in age. I'm one of those late bloomers where I found out where my passion was much later. So slowly one thing led to another, and then I got introduced to GAN, and then with that I got introduced to price cycles and time cycles. So then that, for some reason, it talked to me so much more than everything else. And I guess in hindsight, my mind was very good at recognizing patterns. So I think that's the reason it felt so natural to me doing that. And before that, it was mostly, hearing about, oh, Apple is good, Google is a good company, so you go and invest there. But now, since I'm doing cycles, I mostly chart the cycles of the stock and see where they are in terms of their time and price. And based on that, I either exit my position or adjust them, or maybe take in a longer position. But as we all know, these days the markets are, from day to day. Today is this, tomorrow is that. So mostly I'm a trader now versus an investor. I'll wait for the time for the cycles to completely play it out, and then probably it'll give all of us a good opportunity to be long, because S&P has already marked a higher cycle, which is at 7,569. So it will get there sometime. I'm not saying in near future or whatever, but definitely in a few years it will get there. But before that, if it can complete or finishes all this business of coming down to the 2020 low, retesting it and holding it, then probably a stage may be set to see those higher prices. Now, if we go and breach that 2174 low of March, then probably there is more trouble than we thought. So that is also another thing. So right now we are in the second cycle going high from the 4800. Actually, our cycles completed at 4489. So anything it made above that was excess, and that is how it fired the newer cycle to 7000. Now, as long as it is below that cycle high, the weakness is still there in the markets, and slowly it's trickling down. And we all know the macros around us is bad. The interest rates are rising up, the European crisis is there, the oil is there, the dollar is there. So fundamentally, and plus today AMD said something, FedEx said something. So your transportation is not good, your semis are not good, and these are your actually fundamentals which drives the economy basically. And if these two sectors are not doing good, then anything building upon it may not do well, right? So we need these two to turn around to say that market at least temporarily may have bottomed. Now, having said that, I do options. My major trades are in options, and mostly I do credit selling because the volatility is so high, which makes the IV high. So best is to get money from the market versus giving them money and then seeing your calls and puts lose. So my major trades is in XPX. Every day I do some kind of IC, and then because the beauty is now XPX expires all 5 days. Monday to Friday you have expiry, and if you can time your trades right and you know where to look for in terms of where ES is and what it can do, the credit selling can get really good. Um, I mean, these days I'm selling more conservative trades because of the overnight risk. So I collect somewhere between $1 to under $2 credit on say 10 contracts. So in the morning you get up, you have 1,000 to under 2,000 based on how much credit I got. I get to keep it. That's not bad for you know, considering a bad market, for example, right? Any money you make, $500, $200 based on your risk, based on your account size, it's good. At least the needle is moving versus, you know, panicking that things are not working out. And my other trades, which I generally do, are earnings and Powell movements and CPI movements. So what I've noticed is that the cycles and the price where it is generally gives an indication before where things are happening. And from last few quarters, we have been nailing most of the earnings in terms of the move, where they're going to move. Now, if you're playing commons, that's a very good thing. But if you're playing options, it can be a little bit tricky because the option move may not be equivalent to the stock move. But we have been nailing the options as well on those. I play all kind of option on those, strangle or a butterfly or a ratio fly. Ratio fly sometimes for a credit is very good because they'll pay you to get into the trade. So you take some credit in the direction of the trade. Basically, suppose you're bullish, you do a ratio fly and you get a credit, say 30 cents I collected, so it's a free trade for me. So if the stock tanks, I keep the 30 cents, but if the stock goes up and it is within my short leg, I make money. So basically I spend nothing, and it's mostly overnight trades for short expiry, so you make the money fast. And my strangles are longer dated because the stocks sometimes don't move immediately, they take few days to move. And then iron condors, basically the whole idea about options is it's a time instrument designed to work against you. So the best is if you can time your entry right and you can understand how that particular stock moves, you can play with options any which way you like, because you have the option to buy, you have the option to sell, and a combination to make a permutation and combination of all these things. Put, call, buy, sell, buy, sell. You can have multiple legs attached to those, and it is all based on how you design your stock movement. Basically, it is designing the stock movement versus doing a design on the option. So you design your stock, how it is going to move, time it right, and based on that, you can go sell, buy, whatever you want. And that's how I generally do it. So I don't design the option, I design the stock movement, and based on that, I go with my option strategy.
Wow.
Did I speak too long? Sorry.
You never speak too long. That's the thing about this space, especially with all of you. You can speak as long as you want. This is about us learning from each other. So brilliant. Thank you so much for sharing that. Valuable insight, Nargis. Did I say it right?
Yes.
I hope I said it right. That was perfect.
Yes.
Good. Yes, I'm working on it. Okay. You know, it's better late than never. And it seems you found the ideal profession for yourself, because you are just, I mean, I love listening to you speak about options. I'm an options trader myself. I love going into complex options, and it's fascinating to study, learn, and execute them. And you do a great job of that. And thank you so much for sharing. I do have some questions about your purchasing and selling, but I'll get to that after we introduce the one and only amazing butterfly queen. So glad I could finally pin you down for a space. Super brilliant. We love your Substack on the market. It's an excellent morning read. I hope you all are subscribed to it. You are a contributor at La Duke Trading and my favorite bar chart. Love bar chart. And you also do mentoring. I see now how you're so busy. Please tell us about yourself, Archana, and your trading and investing styles.
Yeah, thanks for having me. It was same thing like Nargis. I left my corporate job and took care of the kids for some time, and then did not want to go back into software, which I used to do. And I decided to try my hands on stocks and options, learn technical trading, started doing that. But then I'm from Chicago, so there are so many market makers who had left the floor and used to do teaching. They used to have courses. So I learned from Dan Sheridan, who was a former CBOE market maker, on how to do these complex strategies, but use Greeks and probabilities to have weekly income. So I learned how to do the weekly butterflies and the weekly calendars. And it was a kind of just put it on a specific day, and if this is the probability and this is the delta and then this is the vega, just do this. I learned that. But I started with charting and learned all the fibs and everything. I couldn't ignore the charts and just do that. So I combined the two and made it my own. So I do my fib analysis and regular charting and look at the IV to come up with strategies. And then from 2018, became a contributor and moderator at Laduk Trading. So in her trading room, I am contributing and have a Discord channel there for advanced options. I write my own Substack, which is mainly income trading for using SPX or any of the indices, ETF. Same like what Nargis does, sell something out. you know Market can go only three ways: up, down, or sideways. So if you buy a call, the only way you can make money is if it goes up, right? But if it goes sideways, you don't, and if it goes down, you don't. So just knowing where the market is not going to go, um, in itself can help you use those strategies and make income. And that is what my Substack actually tries to do. I look at the daily, weekly fibs, come up with levels where it is not going to go, and probably sell something there. And SPX having daily expiration helps nowadays. So that's how I do. And then I also like doing butterflies and ratio spreads a lot, because the probabilities are so much in your favor with those trades. um yeah, I do those a lot actually.
I love that. Thank you so much. When we come back to that section of the space, we're going to talk more about your butterflies and your butterfly queen status. I love that. And yeah, I'm a mom as well, a mom of 3 sons. So I know that whole element of having to juggle between having a profession and working and then raising your kids. And I always hands-on mom. I raised my kids myself. My husband is amazing. He raised with me and we work from home and we're able to run our businesses from home. And I really picked up trading before the kids, but also when I had my second son, just like you, Nargis, I had the same issue with the second son. That was really it. I was really hard to go out and do commercial real estate. I have my own brokerage, but and so I wanted to work more from home. So I picked up on the trading and ended up having this other business I'm in now. But working from home and trading worked well together, and it was a great combination. So trading can be really flexible for us moms. So thank you so much for sharing everything. Now, I want to understand more about all of your brilliant trading minds and what you are thinking and strategizing. I would like to ask each of you about your particular trading strategies, positioning, and types of trades. I know we touched upon it before, but please tell us what you prefer trading, how you prefer trading during down markets or on red days like today. And we have quite a red day today. And what you prefer doing during bear market rallies or uptrends or green days. Jess, let's start with you. What say you?
So who wants to go first, or anybody can go?
Jess, are you there?
Oh, yes. Oh, sorry.
Oh, no worries at all. I don't know
Yeah.
if she has her mic off. Jess? We can go to Leah. Leah, we'll come back to Jess. She may have just had issues with her mic.
No worries, no worries. So yeah, in the bear market, I like to see the trend for the day. So today is amazing day to short. So I tried to take a reversal trade today, but it was a bad idea. Thankfully, I didn't lose money. But you want to trend with the trade with the trend. So today you could pretty much short anything besides oil, and you would make money. And it's a very strong trend. So that's my strategy. And if we are in the range, so-called choppy market, I prefer not to day trade because I don't like to trade on those days. The risk is off. There's a lot of times I would lose money in the past on those days, so I'm avoiding it. Sure, you can scalp, but I'm not a scalper. I don't like to scalp options. And yeah, and the same way, like when we have these bear market rallies, for example, when I was on my vacation 2 weeks ago, we were reaching the low of the year. And I really enjoyed just buying the indices and enjoying this really fast and violent moves, like 3, 4, 5% on certain things. And I bought just safe stocks because those tend to rebound faster. So I bought SPY and QQQ indexes, and I bought some Amazon, I bought some I don't know, Nvidia, I bought a couple of things there, and just sell them when I'm up 4 or 5%. And it happens really fast. So it would be a shame to skip as well. Of course, you're trading trend, so you should be very careful and definitely have stop losses because you don't want to create bags in case we are going lower. Yeah, and of course, in bull markets in 2020, sure, we could pretty much buy anything, it would go up. But right now we are in a bear market. I really see SPY going to 350, maybe even 340. So I will keep some bear put spreads on a big day like today. I had some bear put spreads on Tesla. I took them off partially, and I will open new ones when there is an opportunity again. And that's what I will be doing until we see a bottom of this market, which we never really know. And in meantime, I will be slowly in tiny pieces adding to my position. So I like to be adding to my long-term positions on support levels. So when I see we are on moving averages right now, many stocks I'm looking at the weekly charts, not the daily charts anymore. And I'm just adding little bits on big down days. And then again, as I said, trading through the puts, or sometimes when there is not a good premium, I would get little shares, but smaller portions.
I love it. Love it. Excellent strategies. You do a lot of the same ones I do. Bear put spreads are awesome. Instead of just having a long put, you make it into a spread with a high VIX. Makes sense. Very smart trades, Leah. Love it. Jess, now you're back. You had technical difficulties. We all have technical difficulties with Twitter. I have to say, these spaces, the other night I had issues as well. I was the host and I got booted out. It's just crazy. So hopefully your mic is working. Are you there, Jess?
Yes, my mic is working. I don't even know what was going on. I just randomly got kicked, and then I had no mic, but I was still a co-host. It was all over the place. I also have 2 small birds you can probably hear chirping in the background. I don't know how loud it is for other people, but I apologize if it's distracting. But
I love it.
You can't make a bird's choices for it. They're going to chirp, and we just deal with it.
I love it. I love it. It adds more excitement and more energy to the space. So this is great. So please tell us about what you do in these type of red days and what you do in the green days. Thank you.
Sure. Honestly, a lot of the time I do nothing. I mean, if the market, I'm not a fan of shorting. Unfortunately, it's just not something that I consider to be a strength of mine. I'm just my bias is too bullish. I always expect to see the market go back up. So playing the downside, unfortunately, is just not really my thing. So depending on the day, if the market's really falling apart, then I'm probably going to be looking at stocks and thinking, okay, has anything that I like long term hit my price target? Or maybe something that's been holding well, has it hit a major support that I think it'll bounce off? So that is typically, and sometimes, sometimes the answer is going to be no. Sometimes the stocks you want are just sitting in no man's land. You're waiting for 200, but it's still at 225, whatever, whatever it may be. The answer might be no. And, if if it feels like a do nothing day, then I'm perfectly happy to do nothing. I do prefer, I do like playing reversals. Today didn't feel like a reversal day to me, and it has been playing out that way. I did take a quick, literally 2 minutes. I scalped Tesla off the 1 minute. I was in it for literally 2 minutes. For short puts. As it turns out, I actually could have kept those. I took a 25% gain, and now they're down from 40 cents to 11 over the last, what was that? Not too long. Sorry, my app just froze. But anyway, within it's got to be within half an hour, the value went down to practically nothing. But I don't trust this market farther than I can throw it, so I'm comfortable with the gain in 2 minutes, and that's, I think, really how I've been trying to treat this market. As Archana, our friend, or Butterfly Queen Archana, as she has been pointing out, the market, the major indexes have moved to the downside more than the options market priced in. I think it's 4 out of 5 weeks now. This might be 5 out of 6. Archana can tell us for sure, but that's
This is
not
seventh week in a row.
It's just amazing. So that is not, if you I know people who are very good at playing the downside. If you're good at the downside, then you're probably having a party, but this is not my kind of market. So most of what I've been doing is just sitting on my hands and asking myself, is this the time to start adding? I did end up adding a small with stops, a couple of starter positions. I did take a starter in UNG. I'm hoping that'll bounce off the 200 SMA. I did add NetEase also with a stop. NetEase is a Chinese stock that has kind of held up beautifully. It's bounced off this, when you zoom really far out, it's bounced off this moving average repeatedly over the past, decades. So I'm going to give that a stab. I'm looking for it to hold above 68. It's at 77 right now, which is a little bit of a wider range than I'd prefer, but I'm looking at it as a long-term position, so I'll give it a little more leeway, especially given the strength over the decades, and it's held up better than I think you would have expected for a Chinese stock. I did, maybe I'm a psychopath, but I added Tesla and Snow small with stops. I know that technicals don't always matter during a bear market, but I really think Tesla, I've been watching Tesla I've been trading and watching Tesla for a while, and I really, if it doesn't bounce here, something is broken. It just, I really think this one should bounce. Should doesn't mean anything, which is why I have a stop, but I think it's worth a shot.
I guess if you're a psycho, then I'm a psycho too, because I also added Snow. I sold short puts out of the money ones actually this morning, and they're down 1%. So I'm okay. 1.5%. I'm okay. But the whole point of Snow was to get shares at a lower price. So I did the 155 put, and I got about 1283 for it. So hey, if I can own Snow in the 140s, I'm happy. I think it's a great company for the long term. So we are both psychopaths, I guess. Thank you, Jess, so much. I appreciate all your valuable insight, and thank you. It's very much in line with the way I trade as well. Nargis, Please tell us a little more about your particular trading strategies during red days and for green days. Thank you.
So I've come to a point now, it takes some time to get used to the mindset to flip, because naturally our mind can work only in one direction. So going in the opposite direction takes some training, right? So originally, or rather not originally, initially when most people start, we are all bullish because going green or being up is more better than going down because it's a stressful situation. But some training, some getting used to, some time spending in the red actually trains you to think that it's okay if you are here to make money. So the whole idea now I boil down to is, why am I here? The answer which I boil down to is to make money. Does it matter which side I want to make money? No, the answer came no, it doesn't matter. So it doesn't matter now if the market is bull or a bear. So if my cycle is saying, oh, I'm hitting a big resistance, then I go short. If it's coming to a cycle support like Tesla 229 I'm watching, the day hasn't ended yet, and it may probably do a little bit of a fake out around 218 to 225, and if it closes back over 229, then it's bullish, right? So that's how I look at things, above this, below that, and my cycle numbers guide me. Okay, you know what? And then the few other things I look at it, basically a dance, I call it, how things are coming together, the journey versus just the number itself. So when I say market is weaker below 3752, yes, if it closes below 3752, it has definitely weak. Like Tesla closes below 229, it will be weak. But the question is, how did it come to 229? What all did it do there? Right? So it's possible that it may have set in a greater weakness, but will it exactly continue the downtrend from here itself, or is it going to adjust itself and then show its real hand what it's want to do? So I watch that as well, and that generally helps me give or rather point out to the bottoms and the tops more, or rather early in the game versus later, or not following the narrative which is going out there. It gives me too much noise. And the other things which I do is, sometimes on my Twitter feed, people will see I post fun facts, right? So the reason to put fun at the tag it with fun fact is because it's Twitter and you don't want to say what's going to happen or what you are looking as a probability to happen is. Those fun facts generally are a turning point mostly. So I've seen something and I feel that if this happens, then there's a good probability of that particular thing which I have stated out can happen. And so far, most of the XPX trends have followed through. We got the down, we got the bounce from 35.71 and etc. Those things happen. So if you get in at the inflection point, then the reward is much greater. For example, I was looking for 36.61 to 35.71 to happen, and it hit exactly 35.71, but in the night. So if I went long there with all my risk defined below, you got a 250 point rally, right? And that's a very happy day or a happy week, whoever is looking at that. Now, I was looking at 37.52 and anything which is going above that. And then above 37.52, I was getting cautiously bullish, but two things I was still looking at it is the gaps there are two immediate gaps below, and then there 35.71 has not been tagged. So if that happens, because it was forming an island, so these are the data points I just try to as my 00. Actually I put my name as 007. I don't know why, but I did not think it as in the terms of detective thing. Dale Pinkert from Forex Analytics pointed it out to me, and I was like, oh my god. So in hindsight, our mind knows more than what a conscious mind sees. So I'm training my mind to go into my conscious mind and try to see these patterns more consciously, basically. So it just helps me. I think I'm a more of a researcher kind of personality, and then day trade few things based on those numbers or what it is showing. And sometimes in these markets, little gain is a big gain. you have not lost money is a win in these days. So that's what I'm looking at it, until you have a sustainable trend in either direction. It doesn't matter it is down or up. If it is down, then obviously if you are a long-term holder, then it is going to hurt you, and I hope everyone has a plan for themselves. But if you're trading, then your buy shouldn't be long or short. You should just see what the market is offering and what it can do basically around you.
I love it.
Everyone there.
And that's the
Yeah.
key. I love it so much. It's the key concept is that as long as you are in the green, if you're making money in this tough market, because this is a very tough market, you're doing great. Nargis? Are you there? I think we're breaking up a little bit. Are you there?
Yes, I can hear you now, I guess.
Oh, perfect. Wonderful. I didn't know if you were finished or not. Was it my mic that was out or was it your mic?
No, I could hear you echoing, so I'm not sure whether it's the problem is on my side or it's generally Twitter thing. Yeah. Sorry
Were
about
you
that, guys.
complete with what? I'm sorry.
Yes,
I'm
yes.
so sorry.
No,
Did I?
I was complete. I was complete. Thank you.
Oh, wonderful. Well, I have to say you are 100% correct. I agree with you. If you are green in this market, even if it's just a small green, take it. It's wonderful because this is a tough, tough market. And excellent point that you make. Thank you so much for sharing all of your wonderful strategies. Archana, please tell us what type of trading strategies you prefer on red days and on green days, because we seem to have a nice mix of both lately.
Yeah, we do. But I, more than what is happening on a red day and a green day, I'm looking at what the VIX, even though VIX has not shot up the way everybody was expecting, but still, I mean, if you are below 28, I am not going to be selling premium at that time. This entire week we have been above 28 VIX, 26 VIX. So then, yeah, I'm selling premium. As I said, with high IV and SPX daily expirations, I'm selling. But then the moment if we go below 26, or if we are close to 25, and especially for this year, then I'm switching and I'm looking at some calendars to do. And, yeah, reversion to the mean is not happening this year, but still, when you are going from 30 VIX to around 25 VIX, that is some kind of reversion to the mean. So you can actually sell premium and do a calendar spread to make income. And of course, I have you're looking at the weekly expected moves that I use, and I use fibs together to see where in a week or two it could pin upside or downside, doesn't matter. And I can have those $10 wide SPY butterflies. And, like everybody talks about the JPM collar, right? Every quarter, and this time they have close to the 3400. And if you look at it, the 3420 around area is the quarterly 21 moving average. So I'm like, okay, they are putting it at a quarterly moving average. Why not, if it is going to go there? So I have a butterfly there sitting, for that 3400 kind of thing. I bought for 15 cents. Okay, SPY, 15 cents butterfly I bought. Even if it doesn't go there, I lose $15. But if it goes there, the way these people, last quarter, September, we almost pinned to that put strike for JPM. So if we go there, I can make $1,000 there, right? Just paying $15. So those kind of things I have. And that's the reason butterflies are low. Everybody talks about them being very low probability trades, but then if it hits, you're having a home run. So I do those kind of trading, and I like those. Same thing with Nargis doing ratio spreads during earnings. um, knowing where the market is not going is more important than where it is going, especially for this year.
I love it. Yes. Yeah, I agree. Please continue. I'm sorry. Butterfly Queen. I love it. I'm just agreeing with you.
That's the thing I'm doing. I mean, every day I'm looking, if for the day, if you are below the 50% of yesterday's candle, your bias is bearish. If it's above, it's bullish. Simple stuff. Weekly, we gave up 36.71 today. That is the last week's 50%. So we are bearish. So those simple, just if you are above 50%, find something to do on the bullish side, or if it's below, find something to do on the bearish side. And of course, looking at VIX, I mean, in 2020, 2021, the VIX was a different standard. This year it's somewhere, if you are at 24 to 26, I am trying to do calendars, put calendars or put diagonals, or call calendars and call diagonals. The moment it goes about 26, I'm selling some premium. That's how I trade.
Love it. This is the most insightful, most actionable ideas yet. I have to say, this is brilliant. I'm going to be listening to this again. We recorded it. I'm going to be listening and writing these down. I love butterflies, and that's why you're a butterfly queen. The way you execute them is brilliant. And I have so much to learn from you. Amazing. Thank you so much, Archana. Now we're going to go on to mindset. Mindset is everything in life and in trading. Maintaining a positive growth mindset is key in successful trading. Keeping our emotions out of trades, having confidence, patience, discipline, and most of all, never giving up, especially when trades go against us. And they do. That's part of being a trader. Jess, I love your mindset discussions that we've had. You have a fantastic winning trader's mindset. Please share with us this mindset. Oh no, did we have a glitch again, Jess?
Oh no,
Oh,
sorry.
good.
I wanted to wait one moment to see if the birds would calm down. I have a small zoo. But they keep me company in my office. Anyway, I think I think mindset depends on your context. If you are retired or looking at retirement, then you're in a very different position than somebody in their 20s or their 30s or even their 40s. I mean, honestly, even 50, you might be looking at 15 years till retirement. It really depends on your circumstances. For me personally, I'm, I'm not planning on retiring in the next 3 to 5 years, so I'm just trying to I just try and keep my eyes on the horizon. Just remember every single day, the things you're doing now and any pain that you experience is for is for a better future, and I think that mindset is important. If you're retired, then hopefully you're not sweating it too much because you put away 1 to 2 years of cash. Same thing if you're planning on retiring soon. Hopefully that is something that you have thought about you've thought about ahead of time. It's certainly something that it's certainly something that, when I'm retired, I will be looking at doing, because you never want to, the worst bear markets are about survival, and you never want to be in the position where you have to sell everything at the bottom, especially, for a crisis, whatever it might be.
So true. So true. I love that. Thank you so much. You heard it right here. You don't want to sell at the bottom. Agree. That's the worst thing you can do. And that's one of the worst things to just get you to want to stop trading, because then you just sell at the bottom and then you see the stocks go up and you just feel so down about everything. So yes, avoiding those mistakes helps you avoid having a negative mindset. So great. Thank you so much. Leah, you have, you are neuroscience and you get your master's in psychology. You're all about this mindset. So please share with us your take on mindset and trading.
Yeah, so I'm fundamentally positive person, and I want to think positively about the market also, even though it doesn't look that way right now. But I think that at the end, the optimist is going to win, because the pessimist is most likely going to sell at the low and think that the world is going to end. And, in trading, I think it's about mostly 80% of success is psychology. You can be as good of a trader as you want, but if you freak out and if you make quick decisions based on your fear and greed feelings, then you will not succeed. And that's why most people do not succeed as investors, and they will never manage to beat the market. Even the worst case scenario, people will lose a lot of money. So yeah, I believe that you need to be robotic when you're investing or trading, and have your plan and have discipline. That's super important to know this is what I'm going to be doing when A happens, when B happens. You have an entry and exit plan, and you treat it as a robot. And it's not easy for people. I'm not saying it's easy for me. There are days when I would love to break the computer and throw it out of the window. And there are also days when I personally also make mistakes. But longer you're doing, the longer you're training yourself to be very technical and be acting unemotionally, the better you're going to become. And the market is designed to take money from people. And that's why they call dumb money and smart money. And that's why sometimes when you really want to throw up and it feels horrible, it's exactly when there are days of reversals. And that's why we have, for example, the fear and greed index. And I love to buy stuff when the fear and greed index is below 15 or below 20, because I know that usually after that, we are going to have a bear market rally or a short-term reversal. And yeah, this has been like that since, I don't know, 17th century, 18th century probably, in Japan, when they started trading rice. The psychology of humans did not change since then. And it will not change probably. We will always behave the same way. It's just on us if we can control our emotions and be more successful and positive, because ultimately the market will go back up. And, I would rather be in the market a little bit, even in those times, because I don't freak out and I don't mind little pain, than to skip the rally. And I know there are some people, they teach to not buy the dip when it's dipping, and they are teaching that, everyone has their own style. I agree with that, but I just don't want to miss the massive rally once, let's say, the war in Ukraine is over. Once, there's some positive news when the Fed's pivot in a year or two, I don't know. And I will never want to predict the market, but I want to be invested a little bit, play around my positions. And it all also depends on your horizon, how many years you have. As Jessica said, if you have 5 to 10 years, you'll be fine. And this is what you need to focus on. Just focus on how many stocks do I have. I'm collecting some dividends. I'm growing my wealth. And if you have another job, it's pretty easy, because then you can take part of your paycheck and you can keep buying stocks for amazing prices. So that's my mindset for these times.
Fantastic. Well said. I also have a positive mindset. I'm always seeing the positive amidst all the other. The world is filled with gray, so I always choose to see the positive, because there's always positive and negative. And to me, these are opportunistic times, and that's how I see them. I keep my cash because I like to remain liquid, and I utilize it in small lots as I scale into stocks that I like to hold for the long term. And it's important, like you said, to remove the emotion. It's almost being robotic. It's like being like the algorithms and the computer trading. And it's about reducing position size, helps reduce emotions, and make sure you have your rules in place before you execute the trade. Because once you're in the trade, those rules, if you start creating rules, then you're going to want to change it all around because of your emotions. So it's important to have the rules you follow, and before you execute your trade. Don't chase and don't overextend. Perfectly said, Leah. Thank you so much. Nargis, what is your mindset with trading?
Hey, so it took me a long time to
get used to the idea of trading, basically, because at the end of the day we are human beings and we are driven with fear and greed. Even though today we may not send our letters via the the pigeons, but we have WhatsApp for that. But the basic emotions of fear and greed has not changed, meaning the humans, the way we operate has not changed. As Jess also said, Leah also said. So now I am at a place where I am slowly trying to take all the emotions out of it. I mean, I still go and screw up. There are days when I actually say, "Oh, axe, come and hit me," or right, the bull, come and hit me. There are days I still do those, but I'm so much better than before. And cutting your losses, basically, not staying in denial is the key. Is what I've learned, that you need to go and face it. It's a red day, you have made a certain loss and it is below your threshold, then do something about it. Just putting a cover, putting the carpet over it and saying, okay, tomorrow everything will be okay, is not going to work. The only thing which will happen is you lose some of your capital and your whole uh, you know the asset size would be reduced, and that doesn't help, because small loss you can regain. So, like, for example, people who follow me for the credit spreads, I tell them, make sure you have your loss set at around 20 cents, 30 cents, or maybe 50 cents, depending on the credit you got, because it's easier to make 50 cents versus $5, right? So that's where now I have trained my mind to go. It's okay for me to have a small loss, because that later with some other trade I can recoup, versus having a big drawdown and then worrying and panicking, and then the whole year stressed out, then your family life is stressed out, you can't enjoy your weekend. Those things, it eats you, and especially doing this trading is a very stressful job. So I would say, if you are a trader and you are getting into this field, don't be like me, like sitting on a chair and staring at a screen. Get up, go do some exercise, drink water, go to take bathroom breaks, eat your food. Especially exercise is very important, because we traders only use like 4 inch of your body, above your eyes. That's the only body parts we use. So rest of those 5 feet or 6 feet, we definitely need to start using it. And unless and until we start using it, that 4 inch is not going to help us anymore. So exercise is a very important thing if you are a trader. So that is one more thing I'm trying to implement. And I'm trying to take my profits a little bit earlier, because it helps me to not panic. So if I have a position, say 10 contracts, I'll take out 3 so that first my capital is a little bit out, then I book some profit, then I leave some free runners to see where it can go. Now, once I've learned swimming or I've become an expert, then I can go and do some uncharted waters. I can go and swim in the ocean with the sharks, right? So if I've taken out my capital and I've booked some of my profits, and then some free runners will help me see where it can go. And then if I lose a little bit on them, it's okay, because my overall position is good. So taking profits in parts is also very important. And you know what, that they call it dollar cost averaging, that may not work every time, because it depends on the company and what it is doing. And for example, Meta and Netflix and Boeing, they have fallen off the roof so much that the company actually needs to turn around, that so that they can start moving in a better direction. Now if you started DCing there, then god knows how many years it can take. I mean, provided Boeing is a very good company and it may not go under, but you don't know about Metaverse or Netflix or something like that. We have seen earlier Ford and GM, and those things were your bigger markets, and today they are not. So Amazon, Google, these are the in thing today. Tomorrow we don't know if they are, because life changes. The constant today may not be there tomorrow. Some new innovation will come, some new industry will come, and that will take over. So what is your plan to take your profits, right? You are in this market to make money. So what is your goal to make money, basically? When would you want to enjoy your money? Yes, retirement is there, yes, kids education is there, but in Amazon, do you want to stay forever? So those are the kind of questions I've started asking myself. uh, you know what can happen and what can I do? for those things. I want to live my life. I want to travel. I mean, send my kids to college. Yeah, but still, right? I don't want to go and climb a mountain when I'm 60 or 65. I want to do it earlier. So thinking on those goals along with your monies being around you is also very important. So trading and investing is a part of, it's a subset of life. It is not the life. So enjoying your money, that asking that question is also important, in my opinion. I think my blabbering is done.
Love it. No, it's perfect. I want to make sure you were done. I didn't know if you cut out there. I love it all. And you mentioned a very valuable point. It's about what it costs you. And it's not just money, it's peace of mind. It's your time. There's nothing more valuable than your time. And if it takes away from the evening time or not working out or not being healthy, it's not worth it. And I love that you brought that up. Thank you so much, Nargis. Excellent. I mean, I'm just going to say, before we get to Archana, I'm blown away by all of you. You're amazing, your trades and your mindset. And I'm learning so much. And thank you so much. Just wanted to say that. Thank you. Archana, please tell us about your mindset. What is your winning trader's mindset?
Yeah, I mean, it has taken me so long to, know that the market can do whatever it wants to. It's not going to always honor uh, the moving average that I think it's supposed to stop at, right? It has. So there was a time when I just started learning and did technical analysis and all that stuff. I mean, I did my charting correct. Why did the stock not stop there? I've gone through that phase, so I it took me a lot of time to get to a spot where I'm like, okay, market can do whatever it wants to. Do I want to make money or do I want to be right? So it took me time to get my ego out of the way, and that's when I started learning these different types of techniques of how to reduce risk. I mean, if I buy, Tesla calls, sometimes you're buying a Tesla call for $1,000. But then if you're just buying a call spread, you can buy a $10 call spread for $2.50. So there itself, you've cut your risk in half, more than half, right? 1,000 versus 250. So you've cut your risk by a fourth, you know. So then learned about butterflies, learned about calendars. Okay, if I do a 50-cent butterfly, the most I can lose is 50 cents. So every part of it is where I am wrong and where should be my stop. And if I don't want to go fully directional, then okay, what strategy should I use, using these probabilities and using the IV in my favor to choose a strategy where I risk less. If I'm doing a 50-cent butterfly, I that is then I don't need to put a stop. So there goes, I have no emotion anymore, right? What Oh, I'm not watching the screen all day. So those were the things that first I had to give my ego up and learn little more strategies. And then I still make mistakes. Still today I make mistakes. And then I have the mantra that I use is, okay, one day at a time, one trade at a time. So every day after the market closes, I am doing some kind of journaling. Okay, was my analysis right or was my execution wrong? What was the reason where, and then, if my execution was wrong, then I reduce my size for the next day because it was me being emotional. And so the next day I cut the size half. The only way I am allowed to play a little bit bigger than what I have is if I've had consecutive up days in my own trading, in the sense that my analysis, my plan, my execution, everything was to the T. The next day I get a reward to, instead of doing 5 contracts, I can do 10 contracts, whatever. Or if I've messed up, 10 contracts become 5 contracts, 5 contracts becomes 2 contracts, and then slowly get back. So, you know, I give myself rewards like that and figure out a way to keep myself engaged.
I love that. That's wonderful that you're just giving yourself little rewards to keep yourself going and engaged. That's awesome. We should all practice that. That's a great idea. Thank you so much, Archana. Now I'd like to move on to, we're nearing the end of our show. We have 2 questions left, 2 sections. I'd like to touch upon the sideways market that everyone's been talking about lately. They're saying we may have a long-term sideways market. A few weeks back, Druckenmiller said, we're going to be flat for a decade. Now that's a long time. If we do get a sustained sideways or flat market for years, we all need a plan on how to trade that market. So let's share some ideas on how you will trade a sustained sideways market. Jess, do you have ideas for that?
Well, I think the first thing I'd like to say is that whatever happens, we will get through it. The market that my father started trading in essentially moved sideways and essentially moved sideways for over a decade. And he says to me, actually relatively frequently, he's like, Jess, one day the market is going to do nothing. Just nothing. You won't even want to check your portfolio because it'll be up a couple bucks, it'll be down a couple bucks, but nothing will happen, and it'll last for years. So that was basically my father's experience with the stock market when he started. How he stuck with that for, well, until now, I don't know. It's truly impressive, but in case you're wondering how how a sustained sideways move would feel, that is one I've been told directly over and over and over. It's going to be boring. You're not even going to want to check your portfolio. But in that kind of market, I'm still going to quote Jim Cramer. There's always a bull market somewhere. Of course, you hope to be you hope to be capable of finding the stocks that are moving higher. And if you have long-term positions, covered calls are always an option. Obviously, if volatility is low, how much money are you going to make? I don't know, but money's money, right? And anyway, I'm not sure what other strategies there are, but a sideways market probably going to be good for different options, not just covered calls, but straddles. Archana can probably speak more about specific strategies. I don't usually get more complicated than buy a put, sell a call.
Love it. Love it. I can't wait to get to Archana. I know she and I were talking about sideways market, and she said she was very excited. She can make make money during that market. So I'm excited to hear her approach as well. Leah, what are your thoughts on a sideways market, and how would you trade it?
I think just with options. Of course, like sideways market, it's not going to be in one place the whole time. It's going to go up and down in probably a range. So I would just trade the range, I guess. I'm sure there will be movements, and I would trade it with shares or with options, depending on the volatility of the day. If it's way too low, then just swing trade. Swing up, then short, and try to make some passive income from selling calls, covered calls on the top of the range, and selling puts at the bottom of the range, and just rinse and repeat. It's like the wheel strategy, it's called. So that's what I think I would do, and create some passive income through that. My only idea for now.
Well, I have the same idea as you. So I do wheel strategy. When I get shares put to me with any sold puts, I do utilize the wheel strategy as well. So I would probably be doing the same in a sideways market, playing the top and the bottom. The key here, which is the actual title of our show, is options trading. And in a sideways market, options trading is key. And that's what we'll be utilizing as it's sideways. Thank you. Nargis, what ideas do you have for a sideways market, please?
So if there is a sideways market, those are best for selling premiums, provided you know the range of whatever you are trading, whatever equity or index or future you are trading. If you know your range, then selling premium is the best way to go about it, because especially with options, right? uh, so if the ES above February 2020, I have marked it into 1 to 5 boxes, 4 boxes basically, right? And each one is a precise range of couple of 100 points, 200 to 300 points, right? From 4800 to 4500, 4500 to late in 4250, that range. And market has been going time in these boxes. So for me, that range gives enough to sell credit, and also up and down the futures basically. So in these markets, trading futures generally helps, if you can get good at it, because let's say you're doing ES futures, so 1 point is $50, and if you can make 3 to 5 points in one go in one round trip, in a day you can easily get 500 points, right? $500, sorry. $500 is good enough for a day, right? For as a side income. And the other important thing to note is, when we say market is going to sideways, what market is going sideways? Are we talking about the S&P going sideways? If that is the case, then some other market will do something, right? There's oil market, there is metals, there's commodities, there's some currencies, something is there which is going to move, because the money needs to move somewhere, right? So the idea is to find where the money is, or the movement is. So in my opinion, getting stuck to one thing may not be a good thing, right? So expand your options, see what all is out there, and then find which one entices you, or which you can be good at. Some people can be only good at trading Tesla. So if that is your poison, then understand Tesla, and within that set range, play your moves. If oil industry entices you, and these days oil is giving very good range, basically 77.5 was the marker I was looking for it to hold. It poked below but hit that, and now it is almost 93. That is super gold in oil, right? So if you were just stuck in XPX, then we would have missed that move in there, right? Gold 1630 buy point, it gave more than 100 points. So just limiting yourself to a certain mindset is where we can lose in terms of making good money, or not, maybe not good money, but rotating our wealth base, rotating our money, and then making something out of it, is what my point is. So explore out there. And basically, I'm a premium seller, so that would be my best thing to do in a sideways market. But you know what, one point last I will make is, we are at a cusp of February 2020 high. Okay, we are already in August and November time frame, and that's where it is trying to hold. But if you go, I have this XPX megaphone post. If you search by my name, XPX and megaphone, you will get that whole thread. So below this, we enter the megaphone. So if we enter the megaphone, then from 3400 to 2000 is your range. And that's a very big range to play, if you wanted to play that. So keep an open mind when you're thinking of just sideways, because once you enter below February 2020 or the 2020 highs, then you have the whole megaphone opened for you. There's a whole lot of possibility. Will it go all the way to the other side of the megaphone? We don't know, but it's possible that we may not get a sideways. We may get a whole big range out there, is my thought.
Love it. Thank you so much, Nargis. Where have you been all these times I've been trading? Your information is so insightful and valuable, and I love your perspective. It's
Thanks,
so
Roland.
brilliant.
You
You're
know, as
awesome. Everyone, I'm sorry.
No, no, I was just saying, you know what? Time is important. In GAN study, the thing is everything about time. And when time is upon us, things happen. Until the time is not upon us, being on an individual basis also. Let's say if my time is not up, it will not happen. If my time is up, nothing will stop it.
I love it. I love it. This is great. It's time. Time is so important. I agree with you. And Leah is, as we know, it's nighttime in Central Europe. She's busy with her family and she has to go. However, she would like to say goodbye. Before we get to Archana, I'm going to have Leah just say some last words. Leah, please accept your invitation to speak. I would love for you
Yeah,
to say some
it was so much.
parting. There she
Yes, I'm
is.
here. I'm back. Sorry, guys. Yeah, thank you so much for having me. It was really, really nice to talk to you about these strategies. And I self-learned so much. And I'm now really curious to get into the butterflies and other more complex options trading. So I feel like the knowledge I have, there is still so much more to learn. And I think thank you for everyone to join us and then learn with us, I would say. And you guys keep it safe, keep it sane in this market. And yeah, one day it's all going to turn its course and we will be making a ton of money. Thank you so much.
Thank you so much, Leah. We love you. You're awesome. You're so brilliant. And you're just, thank you for sharing. And I agree with you completely. The more I learn, the more I realize how much I don't know. Albert Einstein said that. And I also want to be doing more butterflies. I've done them before, but not that much. And now between Nargis and Butterfly Queen, I'm inspired. So I want to be doing them much more. So I agree with you, Leah. Thank you so
Thank you.
much.
Have a good night.
Take
Bye.
care. Have a safe travel.
Thank
Safe
you.
travels.
Bye.
Bye-bye. Archana, Butterfly Queen, please tell us how you would trade the sideways market. We are all waiting for your response. We're excited to hear.
So sideways market means it's going to be some kind of a range. But so if you look at that June, July time frame, we had that weekly, it was sideways. We were in a 200 point SPX, sideways move. Every day up 50, down 50 kind of thing was there. It was sideways. But we had high IV, right? So we were selling premium. I was selling premium iron condors and, call spreads or put spreads, or doing iron flies if I, because it was a 200 point range. But if we are going to be sideways, because if you look at it, the growth names that just fell out of the bed, they don't have any volume left. Nobody's interested in trading the, Okta and all those things. It's just gone. The interest is gone. So if that is what we are going to talk about, all the volume just drying up and we are having low volume sideways market for some years, then you're looking at time spreads where you sell the near dated and buy the longer dated and just wait out in terms of um, 10 to 20% in a week, doing weekly calendars or weekly diagonals. Those would be my go-to strategies. So it all depends on how we settle that. What is, of course, how big is the range? If the range is big, that means the volatility is high. And the problem is this entire year, the volatility may not have shot up to the 45 and given us the V bottom that we all wanted, but it has been high. And I don't know if we can have 30 volatility for an entire year. That's probably not possible. So that's the reason I'm saying what I'm saying is it depends on what kind of volatility situation we have. If it's going to be low volatility sideways market because the entire um, people who just came in this 2020 new traders, they just give up and there's no volume left, then it's going to be calendars and diagonals for me.
Love it. I like diagonals as well. I'm a big diagonal person, so I tend to do those quite a bit. So that's exciting to know that and to hear you say that that's how you would trade the sideways market, because that's very meaningful. You are a fantastic options trader. Brilliant. Very represented in the community. I have to say, Archana, you're so humble. Everyone, make sure you follow Archana, Butterfly Queen. She is so brilliant, and she just is so humble and does not self-promote, but she should, because she's so brilliant and she could help so many people with her amazing Substack and her valuable insights into the market and options trading. And I mean this, comes from my heart. I really mean it. You are amazing. And you're a wonderful person too. That's the key. You're such a great person. So honored to have met you on here. It's people like you and Jess, Leah, Nargis, that make this whole experience so much better, us coming together like this. One last question to wrap up. What trades are you doing right now, this week or day? And what are you planning on watching in the next week or so? You can just give us one or two items. What has you excited coming up? Jess, let's begin with you.
Sorry, my bird was just screaming in my ear. It's always super fun. So I did mention that I started UNG small today for a possible swing. I am hoping it'll bounce off the 200 SMA. It's been losing the 200 SMA, but that doesn't mean it's going to. I also started small NetEase, Tesla, and Snow. I have stops on all of them. I was just eyeing XLU, the utilities ETF. It's just gotten absolutely creamed. I think I think with a stop that I might try playing it for a bounce. I think it does, unless the market's going to just break entirely, which, it could. I don't control the market. All I can do is choose my risk reward and add and add stops when as appropriate. So I'm certainly not betting, for the record. I'm never betting that the market's going to break, but just in case, utilities making a definitive move down, I don't think is a good sign for anything, and I don't see it happening unless the market's going to break. So I think the risk reward is probably reasonable. I mean, this has been a huge move down for XLU. I don't know if anybody else has been following utilities or if anybody has any thoughts, but.
Yes, I have been watching that, and I agree. And now I see it's shooting up here. UNG is an interesting play. I did play that a while back with Boyle and then Cold. And you could actually time those, Cold and Boyle, like on alternating days, and they would run. They would like a seesaw. Like one would go up and the next day, because they are the inverse of each other. So I was playing that for a little while, and then I just didn't want to babysit anymore. So I stopped doing that. But yeah, it's an interesting chart. The UNG, I like it. It's very interesting. And XLE, I see that. Interesting stuff. Thank you so much for sharing what you're doing. And I agree with you. Anything is possible. The market will do what the market wants. We know the macro. We know the Fed's continue its restrictive policy. Looking at the jobs market today, unemployment is now coming back down to July at 3.5%, going the opposite direction. And Powell did specifically state 3 goals below trend growth, which we got, but then our labor market is not softening, and we have no clear evidence of inflation coming down to 2, as Cleveland Fed is forecasting an even higher core CPI for next week, year over year and month over month, or higher. So, we're going to have to work through this process, but I like that, Jess. I like those plays. Thank you so much. Nargis, what are you doing? What are you looking and watching and planning to do this week?
So from next week onwards, earnings will start, right? So I do have some earning plays in place, especially for the tech. I have some Google, Netflix, and what was the third one? Amazon. Yes. So I have some butterflies on those and calendars on those. So 4 things I'm going to watch, and that will define the market for me, and or rather see what happens if all these or four things come together at the same time. Tesla, just under 220, basically 219 something to 225. What it does if Apple comes down to 135, QQQ holds 267. There's some decimals, I forget the decimals, but between 267 and 268. ES does it tag 3571. And if all the four things are happening simultaneously, that will give me a confluence to reverse the market. I'll go long at that time with my risk defined below, because that will be a powerful confluence coming on the four things, which is the market basically. So that would be the time for me to take the long. I'll probably take out the shorts on my butterflies or my calendars, and then write the long. And then as the earning comes close, then I may add some protection to those long position. So that's how I'm trying to play.
Love it. Thank you so much. You heard it straight from Nargis. I love it. That's great stuff. Archana, please tell us, what are you doing this week and planning for next week?
I have a couple of hedges because next week, Wednesday, is PPI and Fed minutes. So I have a couple of butterflies over, 365, 355 kind of places. And in terms of individual names, I am looking for some of them in terms of medtech, actually, ISRG, because today, if you look at DXCM, um, SWAV has held up. It's a medtech, it's almost at its highs. Then if you look at what do I say? MDT, ISRG, I had seen some flow in that. So I'm just looking at that. I'm selling some puts and buying longer dated call spread, because I don't mind getting long MDT or ISRG. But looking at DXEM today, the way it popped, that's where I'm focusing. Those are the areas where I'm looking for earning related trades for myself. And I'm like, how much more can Meta go down? So I am having some speculative call spreads just for the sake of it, um, but nothing much. I'm doing more day to day right now because the market is day to day, so can't plan something longer term.
Agree with you completely. It changes quite rapidly. And Jess and I had a joke not too long ago. Meta is either the greatest deal of the century or the greatest value trap. I think you remember that. And it seems to have gotten much lower since we had that discussion. So maybe it was a value trap at that time. I don't know. But I like the way they've restructured and positioned themselves for the metaverse. I think they're an interesting play for the long term. I'm not in Meta. I did have shares put to me a while back, and I did do the wheel strategy, and they were called away. Didn't make much on that covered call, and that's fine. I didn't want to hold those shares. But interesting company going forward, and one to watch for sure. Now, I want to thank you all so much, all of you, fabulous women option traders. You're all too underrepresented in the community. You each amaze me every day. Not only so brilliant with your trading, but super awesome people. Appreciate your generosity and sharing your valuable time with all of us here and enlightening us. I've learned so much, and I just realized there's much more I need to learn. So I will keep following and listening to you all as we all learn and share knowledge with each other. Is there anything else that I missed, Jess, Nargis, Butterfly Queen, that you would like to say?
The
Yeah, but
only
I'd
thing
love.
I would. Oh, sorry.
Uh,
Go ahead,
oh,
Jess.
sorry. No, I was just gonna say I'd love to get Archana's view on the move down on the indexes. I personally, you try and be ready for anything, but I'm not gonna lie, I'm a little bit stunned at some of these moves, and I know that she watches the the levels really closely.
I'll just say one thing. It may feel that we all know everything, but we are, again, the market is not telling me in the morning what it's going to do. So we do the best that we can, and everybody does the best that they can. So it's, everybody needs to find their own comfort zone and, not compare or do any of that, and give yourself small rewards so that you can be in this game longer.
I love that. Thank you. It's like a little carrot. Give yourself that little carrot as a little reward. That's great. I love that example. Jess, I love that you ask questions. You are awesome. You're a journalist. You're amazing. Any other questions you have? You're very insightful with your questions.
Yeah, I'm just wondering, anybody have any, no, obviously nobody knows ahead of time what the market is going to do, but like I said, honestly, I'm a little surprised by this move today. I definitely wasn't looking on Monday or Tuesday to get suckered into a rally, but we're down almost 3% on SPY. That's a little deeper than I thought we would go, even given that we have a 3-day weekend coming. If anybody has any thoughts on the move, or anything that they are looking, or now that you've seen most of what's happened today, anything you're alert for next week based on this price action?
Jess, as I said, I'm looking at those four things, right? Apple, Tesla, the XPX, and QQQ. And next week is CPI, right? So if which I'm watching for comes at a confluence simultaneously around the same time, then are they trying to reverse the CPI? I mean, reverse meaning reverse the market on the CPI news, or rather give a bounce on that one, because that will match up with your earnings starting as well. So this is the contrarian thought I am having. But below 3661, we are opening a whole range of downside towards the February high of 3365, 3397. So that window opens. Now, how fast or how slow it can get done, only time will tell. But as of now, Tesla, Apple, they, and something else, AMD, yes, AMD also, especially Tesla and Apple, as Tesla and AMD, they are coming at a point where they may just suddenly bounce around those numbers. Albeit it could be sold. We are not talking about owning the shares and keeping it for life, but so reaction basically around the inflection point, combined with the oversold condition. So can be a ripe thing for these to give those. So that's what I'm watching. All of those four coming to a confluence simultaneously around the same time frame will give me a rally or a bounce to counter trade it.
Love it.
Yeah,
Thank you so much.
Yeah, that's super helpful, and that makes sense. I think the thing that I keep reminding myself is that it wasn't that long ago that Microsoft was one of the generals, and now it just makes new low. It makes it honestly, the long-term chart is starting to look like Meta, and it's making new lows every day. Tesla's joining the party, and Apple can join it at any time. These are some of the best businesses in the world. There is a bottom somewhere, but it's always good to be on guard, because RSI doesn't last forever in a bull market. A bear market.
Regarding Microsoft, I had posted a chart. Mostly, I had some time ago, actually, when things were not this bad. I had posted a lot of charts which were quarterly and yearly. If you look at those, then this fall is should have been expected, is my point. Okay, and falling this much is not a big deal based on the movement they have had. Okay, so right now they're just trying to reverse their move, mostly from 2020. is what's happening currently. And Microsoft was among those which had a parabola on a parabolic movement on a monthly and above time frames basically. And Microsoft was the one which fell least during 2020 as compared to others basically. It was the most strong stock among the tech, among the markets basically. So now now also it slowly trickles down. It's not even Apple has given good moves, but Microsoft move is still a slow trickle. And when you said there is a bottom, yes, there is a bottom, but if this wants to get ugly, then the bottom is much lower, is what the cycle suggests. So I wouldn't be surprised at anything. So rather I would have my mind be flexible enough to not be surprised by anything, is all I'm saying. Now, do we go and hit those lower numbers? Time will tell. But as I said, right now we may enter the megaphone, and once we enter the megaphone, the other side of the megaphone is exposed. Will we go there? How much we will go there is all time dependent, and how things happen, and will the economy turn around, will the Fed turn around, and when the cycle bottom, when the time is up, all this we will see. But the only thing to keep in mind is, don't be so stubborn in a direction, is all right now we can do. Be flexible enough to be bullish for a certain time, be bearish for a certain time, and then reevaluate.
Yep, fantastic advice. It's always good to stay flexible because the market can change on a dime, and we've seen that. We've had plenty of evidence of that over the past year, especially in a market like this, as we've all seen over the past year. It can turn on a dime. I believe Tesla now, since September 21st, is down almost, from 316 to, about to 224. That's a 29% move. Utilities, anybody who is in those as a defensive low beta play, absolutely rugged, and incredibly quickly too. So, it's best to stay flexible. If you want to use stops, make sure they're in place because this market changes rapidly, and you can get hurt incredibly quickly, especially if you're playing with naked puts.
Agree completely. You'll end up having a lot of shares, much more than you ever wanted. So I agree with you. Thank you, Jess. Nargis, was there something else you wanted to add? I always love everything you add to this conversation.
No, I guess I think mostly I've said on what I've been watching, and being flexible is the way to go. And let's see if what's my number in 36? Yeah, below 36.61, we are definitely weak. And that exposes to us to 34.81, and 34.81 is the cycle price target coming down from 4800. So that also forms a confluence. So many things coming together, as I say, creates magic. So I'll be watching very carefully here.
Thank you so much. Archana, any other final words or additions you'd like to have to the discussion, please? I don't know if, can everyone hear me?
Yes, I can hear you.
Perfect. I can't hear Archana. Archana, are you there? Can anyone hear Archana?
No.
Oh, I think her mic must be off.
Yeah, I'm here, but I didn't hear you asking for me.
Perfect. Oh, I'm sorry. She's so sweet. Oh, Archana. Yes. Any other final thoughts or ideas you'd like to share regarding anything, please?
Trade small.
I love that. Reduce position size. That's key in not only reducing emotion in your trade, but also reducing your risk, which is absolutely important in this market, in this very long and drawn out bear market. I didn't want to bore you all with macro information regarding why it could possibly be down as much as it is. There's many reasons for it, but earnings are coming up and there's a lot of bad sentiment regarding earnings with rising rates and diminishing future valuations. Margins are compressed. There's slowing growth. Manufacturing data that came in, and that's business outlook on nominal business outlook, not on real. And we live in a nominal world. So it looks, it's a forward indicator for earnings as well. So there's negative sentiment out there, and we could potentially have very challenging earnings. We'll know as it comes, but that could be just an idea I had as to why maybe today, and it's been very rough lately. But we don't know anything. And I'm the first to say, we learn as we go, and we don't know what the market's going to give us tomorrow. And the key is not to try to predict, but to react. And we got to plan our risk management properly, but we don't know what tomorrow brings until tomorrow. So it's gambling otherwise to try to bet on something. And I don't like to do that. So thank you so much to all of you for being here. You're wonderful, all of you. And by learning and sharing together, we can elevate each other to be better in investing and in life. Maintain a growth and positive mindset, believe in yourself, and most of all, never give up and keep learning. Thank you all for coming. I appreciate all the listeners and all these amazing speakers. Make sure you follow all of them. You want to be in the know. Nargis, Butterfly Queen, Archana, and Jess. Our mystery guest has been revealed. So Jess is the mystery guest. Thank you all and have a wonderful day, wonderful weekend. Bye-bye.
Thank you for listening to the Rose Show podcast. Please visit RosannaPrestia.com for more episodes. See you soon.